Welcome back to the Dividend Diplomats YouTube channel, everyone. You know us by now, the Dividend Diplomats. Today, we're going to talk to you about a stock that just got crushed after earnings that is looking pretty appetizing from a metrics standpoint.
Guys, the stock's down 43% this year, but let's smash the heck out of that subscribe button, show the diplomats some love, hit the like button. Let's spread this out to the millions and millions of dividend investors, guys, out there. Let's get to 20,000. We want to be the best dividend investing channel here on the YouTube network. And Bert, this is a stock I know that you own, that you've been gobbling up shares. And now that the stock got crushed after earnings, is it time to buy the stock right now?
I think that's the $1 million question we're going to find out. It's been an interesting set of earnings weeks over the last few weeks. Some companies are releasing some very strong results. Others, not so much, Lanny. And it's kind of a mixed bag, and it depends on the sector, and it depends how inflation and supply chain are hitting each respective sector. In this one, this has been a very interesting case because we are talking in the technology sector, but not just specifically in the technology sector. We're talking in the chip area. We're talking at
Intel?
No, we're not talking Intel. We're talking Qualcomm.
Instruments? Oh, no.
No, I jumped the gun and told you that. We're talking Qualcomm, ticker symbol QCOM. That's right. This has been a stock that I've been adding over the last year. We have owned and built our position to over 12 shares of Qualcomm throughout the year. We own 12.122 shares at a cost basis of $124.62. So I'm very interested to learn more about this stock, go through their earnings release with everybody, run through the metrics of our stock screener, because this company could be jumping up to the top of my watch list as an opportunity to take advantage of a tough quarter and just keep building that position and lowering that cost basis. So this will be a very fun video for me selfishly, but hopefully for all of you out there in the community.
Yeah, I mean, Bert, since that earnings release, obviously down quite a bit, if I could say so myself. And if your average cost basis, I believe, is in the 120s, does that sound about right?
Yep, 124.
And they're down about 10% in the last week. It's trading almost 15 to 20% below that average price. So guess what? You already know where I'm at with it, but we should definitely look at the Dividend Diplomat stock metrics, which focuses on three quick items: the price to earnings ratio less than the S&P 500 and some of the competition; two, that dividend payout ratio below 60%; three, a history of not just growing the dividends, but at a rate that is definitely sustainable. And then we'll throw in the dividend yield as the cherry on top, the sweet chin music to the face, the pedigree to the mat, baby.
I know, it's going to be fun. So let's go through the metrics first this time. Then let's talk about the earnings release. So let's kind of flip it sometime how we do it, because let's have fun with this. Qualcomm's price, they just closed at 106.69 to end the week. Yeah, so if my cost basis is 124, they're already down heavily there. They're at 106.69. Obviously, very close to hitting the double digit instead of the triple digit mark. Price 106.69, forward EPS 10.08, PE ratio 10.58.
Wow, 10.58, way less than the S&P 500, probably comparable to where Intel is currently chilling at right now. But let's look at that dividend metric. That second one, dividend payout ratio. Guys, they currently pay a nice, healthy 75 cents per share per quarter, or $3 per share per year. Take that over to $10 in expected earnings. A nice, cool 30%. Plenty of room to not just pay the dividend, but to grow the dividend.
Yeah, and let's talk about that growth. This one kind of caught me by surprise. They're cruising towards becoming a dividend aristocrat, which is rare in the tech sector. They've increased the dividend for 18 consecutive years. Their 5-year dividend growth rate, 5.39%. So I think that's usually one of the caveats here when you're looking at Qualcomm, is the dividend growth leaves a little bit to be desired for a tech company.
Oh, I mean, and last but not least, that dividend yield has now jumped to 2.81%. And just to give a little bit of flavor, that 5-year dividend yield average for Qualcomm actually currently sits at, 2.61%. So they're trading 20% basis points higher right now on the yield.
Yeah, so here's the question. With a P ratio of 10, payout of 30, 5-year growth rate of 5%, 18 years of increases, and that dividend yield of 2.81%, it's obviously passing our metrics here, right? It's obviously showing signs of undervaluation, but is it undervalued or is it a value trap today? And I think to help answer that question, let's go through the earnings release. Let's see why their stock dropped 8% too, because numbers are one thing, but context is also very, very important from it. And what was it that the market did not like about Qualcomm? Well, demand shortages. Yeah. Phone sales, great right there, Lanny. Get like the old Zach Morris phone, like the big one there. Yeah, I need a brick for that. Demand is falling off a cliff. They're actually projecting that the sales are going to drop in the low double-digit percent here for that. So it's not, if smartphones are facing issues with sales, and Qualcomm, that's obviously a major part of their business, of course that's going to trickle through Qualcomm's earnings, and that's going to trickle through their revenue. That's going to be a major future blow in the short term to Qualcomm's top and bottom line.
Yeah, I mean, supply chain right now really impacting it. Inflation, guys, we all know it. Dead horse there. Record inflation right now, spurring some of that demand by consumers. So you put those two together, guys, you're going to lead to a lot more inventory.
Yeah, and that's actually, I think the funniest part was, think of how fast that flipped for a Qualcomm and a lot of these chip makers here. For the last 2 years, the company has been dealing with shortage. It could not keep up with the demand for PCs, for smartphones. It was get them in, get them out as fast as you possibly could within a very short period of time. With the demand from their largest customers falling, now we have these massive inventory buildups at Apple, at Samsung. They're not going to be buying new things, and that's actually causing inventory to jump up here for Qualcomm. And you can see that when you look at the financials. I'm going to put up a picture here of the balance sheet. They had inventory reported last year, Q3 2021 was 3.2 billion. That's doubled in Q3 2022. Just 12 months later, their inventory is at 6.3 billion. So you can see this starting to flow through the financials. How is this going to impact them going forward? That's partially what Mr. Market was so concerned about.
Well, I mean, they're still performing very well. Revenue is way up year over year, guys. I mean, they earned what, close to 11 plus billion in the quarter, up 22%. They've earned 44 billion year to date, up 33%. So guys, Qualcomm is still generating a significant amount of revenue. Cash flow is coming in still at over 6.7, 6.8 billion in free cash flow right now.
Yeah, so the financials are great. That's why that's the thing, the demand shortage, but they're still going to crush it. Even if sales in one of their largest sector dip by 10%, their dividend's still covered. Their payout ratio is only 30%. Their revenue is still 44 billion. You drop that by 10%, okay, 40 billion year-to-date revenue. So it's still a large amount of revenue here for the company.
Yeah, I mean, obviously, even their estimates going forward seem to still be on par with that $10 in earnings per share expectations, guys. So again, dividends fine, dividends safe. They'll probably still grow it by a modest amount. That's just managing their cash flow right there. But I'm loving Qualcomm. I mean, what are you thinking about right now with your 12 shares currently? Are you going to buy the stock?
I'm definitely thinking I'm leaning towards buying it. And I think the other cool thing is, to your point, if they're managing the cash flows, you can already see they're doing hiring freezes, they're doing cost cutting initiatives. Like, they're also taking steps to proactively get ahead of this inventory glut. So think about it. If they're cutting all these costs now, what's going to happen when the glut's gone? And they're going to be a leaner company. They're going to be producing higher revenue again. They're just going to be built for future success to work through some of these short-term headwinds. And to your point, I think these financials are solid to deal with and absorb a short-term demand issue to build them for long-term success. And that's probably why I'm going to be buying Qualcomm in over the next few months, probably end 2022. I would love to get this at least up to 20 shares at a minimum, because I think that would be there. But this is also a contender in the short term. I'm also tweaking my Johnson & Johnson purchase strategy when we get to 100 shares. I don't know if I'm going to jump into just one stock every week like I was before. I might start doing a rotating basis. That's going to be a future video. I'm still on the fence about that, but at $106, Qualcomm in the short term, it doesn't look like a value trap to me. It looks like an undervalued stock to buy for a long-term investor like myself, like Lanny and other people with a long-term mindset.
Get them, guys. So what are you guys doing right now for you Qualcomm shareholders? Are you buying the stock right now? Do you find other value opportunities in the semiconductor chip industry? Please let us know in the comments. Obviously, if you haven't already, definitely subscribe to the channel. Give this video a nice thumbs up. Or what else you got for the community here?
Do it. Just do it, everybody. Do it. Do it. Smash that subscribe button. Let's go, everybody. Let's keep pumping through this. Let's keep finding these stocks, putting our minds together, sharing ideas right now is as important as ever, especially if we're dealing with a lot of the headwinds of potential recession. There are going to be a lot of great buying opportunities out there. So let's work together and just keep crushing it.
Guys, that was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.